Namaskar. This is Akhilesh Bhargav. Welcome to Tidbits on Business and Finance with me. Cryptos may be occupying headlines these days, but the fact is that cryptocurrency trading has been going on in India since 2016. In recent months, however, it has caught the attention of the government and other agencies with a sense of growing urgency. That is because of various factors, which include the huge public money at stake in crypto investments. The crypto exchanges claim crypto investments of over rupees 6 lakh crores in India. Some others peg the total figure at upwards of rupees 10 lakh crores, which is a huge amount of public money at risk. The other factors why cryptos are in focus include the price volatility and swings and the runaway gains or losses that take place in crypto trading and put public money at risk. They include the aggressive advertisements of crypto exchanges promising rapid returns to get rich quick. They also include the celebrity endorsements, the proliferation of crypto exchanges and the enormous funds raised by them, and the fact that authorities like the Reserve Bank have been demanding an outright ban on cryptos, saying that they are a threat to our macroeconomic and financial stability. These factors are the reasons why cryptos remain in focus. The government had listed a bill to ban all cryptos and facilitate what is called a CBDC, a central bank digital currency, during the February budget session of the parliament, but it could not do so. But since then, the volumes of crypto investments have shot up, and so has been the Reserve Bank demand to ban them. The concern that cryptos are being used for money laundering, tax evasion, and funding of crime has only added a sense of urgency to the entire issue. This delay in bringing in a crypto legislation is clearly, according to us, because of two camps in the government, namely, one that favors an outright ban on cryptocurrencies and another that rejects such a ban and instead favors regulating them. Of course, they also say that it should be regulated in a very strict manner, but the second camp favors a regulation and not an entire ban. It is not just the Reserve Bank that favors a total ban on cryptos. The RSS also has called for a quick government ban on cryptos because it says that they have the potential to destabilize sovereign economies. Our Prime Minister, on the other hand, has cautioned that cryptos can fall in wrong hands and they can spoil the youth, and he has therefore sought international cooperation to regulate cryptos. This is what he said in the recent Sydney dialogue. In the backdrop of these developments, the government has notified that it will introduce the Cryptocurrency and Regulation of Official Digital Currency Bill 2021 in the forthcoming winter session of the Parliament, which starts from the 29th of November. The government intends to ensure that this bill is considered and passed by the Parliament during this session. The bill aims to set up a facilitative framework for the creation of the official digital currency to be issued by the Reserve Bank of India. It also seeks to prohibit all private cryptocurrencies in India. The bill, however, allows for certain exceptions to promote the underlying technology of cryptocurrency and its increasing uses. The definition of cryptocurrency has not yet been clarified by the government. Except for issuing this notification, it has not shed any light on the provisions of the proposed bill. The Finance Ministry also did not provide any details of the draft bill, and one has to wait for it to be introduced to know what exactly is the government proposing to do with regulating the cryptos or banning them outright. While the government notification indicates a ban of sorts, crypto experts, however, contend that there is a broad agreement with the government to ensure that users are protected, financial system stability is reinforced, and India is able to take advantage of the crypto technology revolution. And they therefore expect no outright ban to be proposed by the government in the forthcoming bill. Some political observers think that since crypto is an important issue, the bill is likely to be referred to a parliamentary committee in order to get a bipartisan approval to it by getting all parties and stakeholders on board. While it has been very obvious that a stringent law on cryptos has been in the offing, this announcement by the government yet seemed to catch the crypto universe by surprise. We think it was always known that the government is going to come up with some stringent measure. Amidst the confusion whether the government would ban crypto trading, panicked investors dumped their holdings yesterday and prices fell by about a quarter, only to recover a bit later. That was a knee-jerk reaction. The markets did recover a bit, but yet the loss for the day was about a 15% write-off on the prices. The markets recovered a bit after some reports said that the government will continue to permit some category of investors to trade in cryptos, but overall, they yet remained on the edge. The crypto exchanges understandably asked their investors to hold on to their assets till the details of the proposed bill becomes public. The industry executives say that a complete ban on cryptos is unlikely given the mass adoption of crypto assets in India. They think that the bill will not propose a blanket ban on cryptos or stop crypto exchanges, but that it will bring under a supervision of a local regulator. They think that the bill will not propose a blanket ban on cryptos or stop crypto exchanges, but that it will bring it all under the supervision of a local regulator. Some media reports, on the other hand, say that there may be a ban on all cryptos, including their mining, their holding, and their trading. Others said that cryptos will be traded and legislated like any other financial asset in the country. While the proposed bill brought immense fear in the minds of crypto investors, the optimists among them expect that the bill will not propose a blanket ban on cryptos or stop crypto exchanges from operating. They think that it will instead place compliance and regulatory requirements on the exchanges, as in the case of any other exchange, and that SEBI will be asked to come up with rules and regulations to govern and administer the crypto exchanges. They also therefore think that the bill may also require companies listing their cryptos to meet compliance norms and to make disclosures with the regulator. That's how it happens when shares are listed on any stock market, and similar rules will come up for cryptos also. The apparent fallout on cryptos, if we go by the crypto notification of the government, is on numerous fronts. The first one, it is apparent that the center is all set to come down heavily on cryptos, and the optimism of the industry could thus prove to be misplaced. There is too much of public money at stake, and the government is not going to take a chance by letting the sector go unregulated. The second, the Reserve Bank is all set and it will issue the official digital currency expectedly by the middle of 2022, and that it will control and regulate the domain of digital currencies in India, though it is strictly not the same as a crypto is. Digital currencies truly are a different item altogether, but then the government is going to ensure that cryptos and digital currencies are almost the same, and that it is going to be the Reserve Bank which will issue them. The third, crypto trading platforms and exchanges will have a bleak future once a ban or a heavy law comes in India. They may be required to return the investor money and assets that they hold, and a failure to do so will certainly invite action against them by the criminal agencies. The other fallout is that the ban will certainly drive away the common retail investor who does not understand the technology behind the crypto and who had got into it only for the lure of rapid gains, which are likely to disappear once heavy regulation or a ban sets in. Further, for those who understand the crypto, they will continue to invest and trade in cryptos on a peer-to-peer basis in case trading platforms are banned. Due to the very nature of crypto technology, even if the government bans crypto exchanges from operating and stops companies from listing new coins, it cannot stop users and investors from buying and selling cryptos, as they have always been doing even before the exchanges came into place. All that you need for it is the internet and e-wallets, and no exchanges are needed for it, unlike in the case of trading or investing in shares of listed companies which cannot be bought or sold without exchanges. Private trading in cryptos will continue, ban or no ban. It is just that the mojo and the runaway gains of cryptos will certainly disappear in case there is an outright ban on them, or in case the sector is very stringently regulated and there are huge restrictions in it. A number of Ponzi schemes are reported to be operating under the garb of cryptos, and these are operated by fly-by-night operators who have been taking advantage of the greed of uninformed investors, and they have been promising huge overnight gains. it is most likely that panic-stricken investors will now demand their monies from these kind of Ponzi operators, and the Ponzi's will collapse, exposing widespread crimes in the sector, and that will also inflict huge losses on the public. Finally, a sudden ban on cryptos will mean widespread losses to the investors, since it is likely that crypto prices will crash or they will substantially come down. The fact is that cryptos do need stringent regulation. There is too much public money at stake at risk, with many shady operators lurking on the horizon. The risks of unregulated cryptos on the larger economy cannot be denied. Raghuram Rajan compares the present crypto situation with the tulip mania of Netherlands in the 17th century, where the public was inflicted with widespread losses. And he also says that cryptos are similar to unregulated chit funds which take public money and then go bust. Mr. Rajan thinks that only a handful of cryptos will survive out of the thousands that trade now. For us, the fact is that we would expect heavy regulation in the offing. If you go by what the Reserve Bank wants, then some kind of a ban would take place. But then, as we said, there are two camps in the government. One that favors an outright ban and the other which thinks that they should be regulated. We think that the legislation will be somewhere between these two camps that are there at present. This is Akhilesh Bhargav signing off till we meet again. Namaskar.